Hi, this is Darren Long from Delta Harbour, and today's show is all about what to expect when expecting. Risk, consequence, what are the outcomes for 2022? What does it mean to your wealth? What does it mean if you want to own gold and silver in this day and age? Is it worth it? Should it be something that's part of your wealth strategy? We're going to find out on today's show.
There are no shortcuts to building wealth today. It takes time, effort, sacrifice, and diversification. But today, diversification means something different than it did in the past. You deserve a more secure way to protect and grow your wealth. At Delta Harbour, we take this to heart. Our mission is to help by inviting you to add physical gold and silver to your wealth strategy. Book a free consultation today and let us show you how to protect and grow your wealth through the ownership of physical gold and silver. Let us show you the Delta difference. Hey everybody, welcome to Hard Money once again. Good to have you along. It's Darren Long and John Scholes here to tell you what's what over the next hour. If you're joining us on our YouTube channel, welcome. It is deltaharbor.com my youtube.com/Delta Harbour. They've got their own channel, of course, and on the radio or otherwise, you're already tuning in. Reaching out is really simple. Get a hold of Darren and Rob and the rest of the team. You want to discuss expanding that portfolio of yours. It is about time. It is 2022. Get on it. 1-877-323-GOLD. 1-877-323-GOLD. Couldn't be simpler. And online at deltaharbor.com. And there's the e-store. We'll talk about that a little more later on the show, where you can begin investing with real physical precious metals with a click of a mouse. That's how it works. But more details coming up on that. What to expect when expecting. That is the title of the show this week, Darren. I don't know if you have something to tell me. I don't think he can get pregnant, but anyway, we'll find out. But there's lots going on, buddy. How's this week been for you?
This week's been good, John. It's a welcome back week. It's quiet. Of course, the new announcements. Our staff are at home and safe and sound, and everybody is happy to be back and optimistic, John, this time of year. Very optimistic. Today's show is a little bit on the non-optimistic side because, again, part of our job is to dispel the mist, to break beyond the headlines. And as so often we discuss, give the real news about what is happening in the financial world and how it relates to gold and silver.
Well, like I said, 2022 now, and we're already a little more than a week in, and massive volatility around the world, cryptos, metals, stock markets, and since maybe we're not on confident footing that we thought maybe would be earlier in the year. What's your take on all this at Delta Harbour?
Well, in getting together for our first major meeting of the year, we did look at what is happening. And of course, no time to breathe. Global stock markets ended down sharply on Wednesday this week as the U.S. Federal Reserve meeting minutes from last month signaled that the central bank may have to raise interest rates sooner than expected. No surprise there. We expected this to happen. We've talked about it, but the spin that is taking place will revolve around what the truth is about the economy growing organically. And are we witnessing a return to norm, or is it due to the fact that copious amounts of quantitative easing have been tossed at the system, which I believe it is. Obviously, it's why I'm so facetious about it, but I think we all know what the answer is.
Predictions, unless you're at the circus, are pretty hard to maintain, especially about the future. So, well, let's look at 22, what we already know about 2022. What are we expecting when you say expect the unexpected? Really the title of the show this week, right?
If you look at the global macroeconomic picture for just a snapshot, then 2022 is basically going to be the beginning of year 14 of fake it till you make it for the markets, for central banks around the world, and of course for the too big to fail, too big to jail entities. And I'm going to make it a point this year to make certain that we highlight those stories, we talk more about them. And this is also year 2 of this global supply chain problem that we're having, where these supply chains have been broken. It's led to all kinds of delays in products. Inflationary pressures are around here. We've had energy shortages around the world. And ultimately, this is what we're looking at. It's inflationary times that lie ahead for the most part. And as we have already witnessed, it's about to become the tightening of the money supply, which basically kills the golden goose.
You know, you use the term "fake it till you make it" in there. It sounds like, a song by an '80s hair band. But in this particular instance, what do you mean by that?
Well, the crux of fake it till you make it is to substitute income earned from increases in productivity, which is real prosperity, with debt. And it's a simulation of prosperity, so to speak, a fake way of producing prosperity. It doesn't solve the real problems. It simply adds a new and a very, very fatal problem to our system, which is the fact that since productivity hasn't expanded across the gamut, neither has real income or real prosperity. All that's happened over the past 13 years. And really, in summation, what we've seen is that this has been due to debt, money borrowed against future productivity gains and energy consumption. And it's funded fantasies of prosperity in all three sectors, which is households, enterprise, and government.
Again, 1-877-323-GOLD anytime. Want to get a hold of Darren and the team, and at least dip your toe in the waters of precious metals, physical metals. And we'll talk a little more, of course, later in the hour about how to actually physically get in there and start doing that. But, we really don't talk about, on the outside, don't talk about this explosion of debt that has occurred anymore. I can't recall, actually, now that, especially since COVID has taken over, anything recently we talked about. Except for on this show, that should concern most people, should it not, at this point?
I think it's very concerning, and I certainly wouldn't want to take away from the seriousness of what we deal with on a day-to-day basis with COVID and health concerns of this country. But the explosion of debt and interest due on that debt could not occur if interest rates still top double digits, as they did back in the early to mid 1980s. We couldn't add tens of trillions of US dollars, Canadian dollars, yen, yuan, euros in new debt unless interest rates were pushed down to near zero. And for the government, the wealthy and corporations only, of course, they get those near zero rates. We all still have to pay 3, 4, 7, 10, 15, 19% in some way, shape, or form on much of what we have as debt outstanding. And so ultimately, at this precipice, at this moment, debt is a huge concern for me, and nobody's talking about it, John, at all.
Yeah, if you've used the expression like a parlor trick, that's what it seems like. It's like the wool continues to be pulled over our eyes, though, right?
It is, absolutely. This is a very cheap monetary trick, and it was accomplished by making central banks the cornerstones of the entire global economy. Central banks create the money out of thin air, poof, all of a sudden exist, add a couple zeros, and they use that currency to buy trillions in government and corporate bonds, artificially creating near infinite demand, which then drove the rate of interest into the ground. And without continuous injections of all of this free money and the suppression of interest rates, as we've seen near record low interest rates on everything, the market would reassert its price discovery mechanisms, which is tying interest rates into risk. If risk is perceived to be higher, John, then interest rates got to compensate for this risk by being much higher for risky currencies, borrowers, and investments. But we know that if we raise interest rates, we kill the golden goose. We kill the stock markets of the world. And risk takers who can't get cheap money to take those risks stop everything from buying to investing to doing anything that they're doing right now under these artificial circumstances. And in fact, that also includes the problem that we've seen with gold and silver. I mean, where do you think this train is heading is the question I ask most people who are calling up and asking whether gold or silver is a good thing to have in their portfolio. Gold and silver are being delivered as we speak right now, John, to Cape Canaveral in preparation for the biggest launch party in prices for gold and silver that we've ever seen. And it's going to happen right at the start of this year. I feel it very confidently that gold and silver are rising and that we're going to see them hit astronomically high prices over the next 36 to 60 months.
Well, I mean, I think it smacks of being prepared, right? So how do our listeners get in there and protect their wealth? A hedge, as you often say, in uncertain times that definitely lie ahead over the next year at least. How do they start that wealth strategy with Delta?
Well, we're going to spend time today in today's show talking about just that, but also about risk and consequence. And if you believe, like we do, that the risk has become way too high and that the consequences are going to be very, very extreme when this all falls apart, then maybe gold and silver is for you. Either buy it directly and take it home from our website, give us a call directly, set up an appointment to discuss this further, how it might fit into your wealth strategy, the types of bullion, gold and silver, bars, coins, all of that. Maybe even put it into storage. If this is too great a risk for you to have at home, you want liquidity, put it into your registered accounts, TFSAs, RSPs. We're in the process of doing that for all kinds of people on a regular, everyday basis. And you can convert over from existing institutions. If you already have a TFSA or an RSP anywhere else at a another institution, banking institution, a trust company, or any of the other credit unions, you can swap that over to us at Delta Harbour, and we'll get gold and silver in there in your name, allocated to you with serial numbers in the safekeeping of a very, very exclusive and well-insured vault. Beyond that, John, we'll talk to the rest of the show about all the other ways we can add gold and silver to our portfolio.
You bet. That is coming up. DeltaHarbor.com. That's where you'll find the e-store as well. And the phone number, good place to start. Always 1-877-323-GOLD. We'll continue. This is Hard Money on Sauga 960. All right. Welcome back to Hard Money. Darren Long, of course, is here. John Scholes alongside. And you want to reach out to Darren and the team anytime. 1-877-323-GOLD. That would be the number you can use at all times. Go to DeltaHarbor.com. Further contact information there as well, and access to the e-store, so you can begin your adventure of getting some physical metals into your wealth portfolio, silver and gold specifically in that regard. But you always want to call Darren and the team and get more details and do your due diligence before you set out in this branch of your portfolio. But anyway, you mentioned risk earlier on the first segment, Darren. It's such a broad term, but as it relates to money printing, what did you mean by that?
Well, first off, we're lab rats, John. That's for sure. This is a very, very big experiment, and the scientists are our politicians and central bankers, unfortunately, and half of them don't know what the experiment is. The other half couldn't tell you even if they did know. And the little tiny fraction of people who do, well, they're the 1%ers that are making all the wealth from this. So the biggest experiment in modern times that Canadians have ever been a part of is upon us right now. This is the debt experiment, as we talked about in the first segment. The central banks of the world, including our own, have basically engineered the suppression of interest rates, which has destroyed the market's core mechanism of linking risk to the cost of money. Near zero interest rates implies near zero risk. And so this entire 13-year spree, and this being the 14th year of entering that, of suppressing the cost of money, has basically institutionalized moral hazard, which is the disconnect of risk and consequence. It's basically made it possible for corporations to no longer have any moral hazard boundaries when it comes to money, because it is and has been so cheap for them to take bigger risks, and they've been encouraged to do so because of those lower rates than ever before, under the veil of expecting to be protected.
Are you saying, or would it be safe to say that corporations are basically willing to take immoral risks in this environment, and they're even being encouraged to do so?
Yes, I am saying it. And it's not a matter of this being said in a verbal sense so much as being said in a consequential sense. Risk has been annihilated, absolutely destroyed. Overextended and overleveraged borrowers can always roll over their existing debt now and borrow more, in effect paying interest with new debt, and so on and so forth. Look at the microcosm of the individual. How many credit cards do you have now versus 15 years ago? If you were independently and financially stable 15 years ago, did you have 3 credit cards? Did you have 4 credit cards? Which is what the average individual family has nowadays. And since risk is essentially zero, then why not make use of this opportunity by gaming the system, which is what those moral hazards promote. The big players who broke the laws against insider trading or selling securities designed to fail, etc., they found that the global empire of debt viewed prosecuting financial crimes as potentially upsetting. So not only did risk fall to zero, so did the consequences of fraud, collusion, and malfeasance. Large companies take the risk knowing they will more than likely get a slap on the wrist. Look, for example, at a company like JP Morgan. Most of the officials of that banking institution should be otherwise considered as candidates to live their days in some of the finest barred institutions we have available. But if you check history, a few dozen billion in fines, a few slaps on the wrist, and they continue to exist today. And I'm not the only one who shares that opinion. There's lots of analysts out there who talk about it on a regular basis. These companies get fined constantly, but it never prevents them from doing it. It's the weight of the risk versus the consequence. If that was you or me, John, we'd be serving a hard time and the key would be thrown away. I mean, undoubtedly. And this is why we say gold for protection, because this house of cards is never more than a day, a week, or a month away from collapsing.
Again, 1-877-323-GOLD. Anytime to reach out on the phone. DeltaHarbor.com is online, the website for more contact information and to investigate and learn how you can get these hard assets, at least open up that part of your portfolio. Question is, I want to ask that, knowing all this and putting it into the hands of the public, does the risk continue unabated?
Sure, of course it does, until that changes, right? Until we have a break, until and this is no different than any other time we've ever experienced. Think of the late 80s, right? Early 2000s, in the most recent events of 2008 and 9 financial crisis. When those events happen, those black swan events, then it stops for a period of time. We talk about things like the Dodd-Frank bills, reforming and more regulation and watching this and preventing it from occurring again. But over the past 13 years, the immunity and the rewards given to those who borrowed to the hilt and then borrowed even more and put all the central bank issued money on leverage bets has trickled basically into the consciousness of retail punters, individuals, households, and small scale gamblers who we mistakenly have begun to call investors. The bigger players have had unlimited and unfettered access to central bank credit, and their bets have become so risky, so large, that the entire financial system has become frail and vulnerable to cascading collapse. I mean, central banks and treasuries around the world have been forced to bail out the most egregious criminal firms and ignore the criminality of individuals in those firms, essentially creating the adage of too big to fail, too big to jail. I do not think that there will ever be a better example of a time when you should own hard assets like gold and silver, not only to protect your wealth, but to grow your wealth when this house of cards falls and this egregious mentality ends.
That's a good way to lead into this one. So how do your listeners get into this, our viewers as well on YouTube, get some gold and silver into their hands and their portfolios today, which they should be with you guys at Delta Harbour?
Well, let me talk about the one thing we didn't talk about. We talked about direct to home purchases via our website. Have a consultation, 10, 15, 20 minutes, 2 days, over 2 weeks, whatever amount of time it takes you to feel comfortable, take it home with you. Or open up a storage account, store your product safely in your name with your inventory, with all the bars and coins allocated to you. Talked about registered accounts, TFSAs, RSPs, liras, your pensions. If you have dead money out there, God forbid it's not doing anything for you, bring it over. We'll show you and teach you how to get gold, physical bars of gold, silver, and coins into a registered account. Or you could take advantage of what we call the bulk bullion account, which essentially means you get exposure to gold and silver. And if you don't care about bars or coins, you don't want to know all about that kind of stuff, you essentially get a discount on gold and silver. It's much less expensive because you're not allocating specific 100-ounce bars of silver or 10-ounce bars of gold to you, which carry a higher premium. You're essentially saying, hey, listen, how many ounces are in that vault? Great. Are you allocating those ounces 1-to-1? Yes. Okay. I want a piece of that. And lots of companies do it around the world. In Canada, we're the largest, and we're proud of what we accomplish. And not only that, John, on this particular account, it means you could finance up to 80% of your purchase. So if I wanted to buy 1,000 ounces of silver, let's say, for example, right now, you would have to lay out, in the 35 to 37,000 range, depending on how you're buying it. The difference is right now you could lay out 8,000 and still control that $35,000 to $37,000 worth of metal. And so that's a huge difference. Not for everyone, but we could definitely show you how bulk bullion could work for you. And I love this method. It makes ownership affordable, and it can be done with gold also.
And again, we're talking real physical metals here. We're not talking paper. We're talking stuff you can hold. You've dropped it on your desk before. I know that makes a bit of a clang. So it's nice to have in your possession. And I mean that quite literally. But we'll take a short break and get into more of our discussion anytime you want to reach out during the show or otherwise. It's simple, 1-877-323-GOLD. That is the number. DeltaHarbor.com is the website. And to watch all these shows and past ones, there's always learning to be done. YouTube.com/Delta Harbour as well. And of course, Facebook, Instagram, Twitter, all the usual social media accounts. It would be Delta Harbour too. We'll continue. Lots more on the way. This is Hard Money on Sauga 960. All right. Welcome back. Hard Money. Good to have you along on the show as we creep into 2022. It's It's going to be an interesting year, so make sure you stick around and listen to past shows as well. DeltaHarbor.com is the website, youtube.com/Delta Harbor to watch the show. And anytime you want to reach out to Darren and his team and have just a chat, first of all, see how this fits into your wealth portfolio. If it's a missing piece, you can remedy that for sure. 1-877-323-GOLD. That's the number to do that. But I got a feeling, Darren, that that wealth, in your opinion, and what it meant just a few years ago, has changed dramatically now. But do you get the sense that this mentality could change? I hope, maybe.
Well, I mean, if back to the way it was, it's very difficult to say. 10 years ago, I could talk to somebody about their wealth strategy, John, and it was a discussion about work ethic, due diligence, long-term views, and very little speculation that wasn't calculated. I mean, they did not want to take big risks. The idea of leveraging a second or third house after hearing what happened to the US was nonsense. It was just a poppycock, it's just not what people would want to do with their wealth. And so there is a population, or a part of our population, that stays balanced and diversified. And the growth of gold and silver in those portfolios is outstanding and has been. But in the past decade, real productivity and earnings have become very stagnant, and all the gains of gaming the central bank's suppression of risk have unfortunately basically gone to, let's say, the top 0.1%, a very, very small group of participants. And now the truth is that, having seen this, the average investor has followed the 0.1% into the casino. Wealth is no longer perceived as flowing from productivity and real gains and due diligence and a long-term view. Like we said, it's now coming from speculation and leaping basically from one asset bubble to another. All the money and talent has flowed into speculation. The real world rots away as everyone pursues the incentives that the central bank regime have created to game the financial system and speculate as wildly as you can, because there's no longer any risk of any asset ever declining again. And we've talked about this time and time again. The housing market, right? It's a perfect example. Housing will never drop, never has, right? There's no historic precedent, except for there really is.
It almost sounds like you're being specific without being specific. So I'll ask you this. When you say speculating in asset bubbles, what do you mean?
Well, housing and real estate is the biggest one. What percentage of investors really have the aptitude, deep pockets, and expertise to be speculating in the housing markets? And what percentage will crash the second the market destabilizes? If interest rates go a full point higher, or a point and a half or 2 points higher, what percentage will fail into foreclosure? It's high, believe it or not, it's very high. And that's unfortunate. Another example, cryptocurrencies, which by way of similarity is the whole connection to social investing. And don't get me started on that, because it's the worst it's ever been. Back in the days, we'd say that, Uncle Rick gave me the stock tip. And that was few and far between. You wouldn't have too many foolish gambles, especially with your primary wealth, that you would take based on Uncle Rick's advice. Nowadays, social investing is everywhere, as I call it, or the act of picking up a tip on social media platform and actually putting your hard-earned dollars into it. 10 years ago, that idea or notion would have been crazy. Yet the majority of people have probably done it at least once, if not multiple times, and without consequence. They've been rewarded for it, John. So they have yet to feel the wrath of a serious pullback. You've got stock speculation without merit or due diligence. Think of GameStop, the most recent example of this, right? Those types of scenarios are all over the place, while good, hardworking, productive, real gains companies like the one we just, BlackBerry, for example, just saw the dissolution of BlackBerry, because we're no longer focused on really good things. We're focused on what gives us the best bang for the buck in the moment. Right? Millennials are going to face the greatest challenges ahead. Leveraged investing above and beyond your income means, buying homes that are now, 15, 16 times what you make in your total income. When our parents, and just a generation before us, they were buying homes at multiples of 3 to 5 times their income. Another example, margin investing in the stock and derivative markets. Have we learned nothing from 2008, from subprime, and from spending money we don't have, in the dot-com era or the Black Monday crisis of 1987? There are so many examples, yet we seem so fine-tuned in our ability to look at historical perspective. Instead, we want to just ride the wave of Bitcoin up to 100,000. And the reality is that this is not for every person. So ultimately, this is a challenge moving ahead. There's a lot of exuberance in the market right now.
I don't know, when you say 15 or 16 times your income on a property or your primary residence or a speculative house, I mean, I don't know how people sleep at night. I don't know how they don't have ulcers the size of black holes. I don't get it. But the incentive, I guess, to invest in real world assets like gold and silver, has been somewhat removed. I mean, you mentioned millennials. I mean, maybe on the younger side, the older side get it, but the younger side, the millennial, I mean, gold and silver, they have no concept of that type of investing, right?
They don't. Maybe it sounds a little bit precarious, not precarious, but facetious, or perhaps like we're whining a little bit about the fact that gold and silver have not had their just due in terms of pricing, valuation, and so on and so forth. But it's not because that I feel that we're not doing well. I mean, as a company, Delta is fantastic. Our business is booming. It's been that way for some time, so much so that it's hard to get gold and silver in any meaningful amount of lump sums. So you're buying constantly, literally every day. We've had to hire and train people specifically with the task of going out into the open marketplace to acquire more bullion from us from many different resources. 18 years ago, we had one source, one place we get bullion from, and that was it, right? The central bank establishment has basically incentivized speculation so much by rewarding those who borrow and leverage the biggest bets. And in central bank casino, everyone who bets on asset bubbles expanding to the sky is a winner and has been a winner. Anyone who took real world risks like gold, silver, by investing in the production of goods and services, they're deemed losers, right? Hey, what's in your portfolio? Oh, stocks, bonds, a little bit of gold and silver. What? You don't own a house? You don't own a property? You don't own cryptocurrencies? You haven't been into cryptocurrencies? You didn't buy GameStop? I mean, all these things have come to fruition, so much so that it's taken that mentality and flipped the switch completely. And this is in part why the comparisons of gold to Bitcoin and similar things have happened. They are nothing alike. One is physical, one is not. It exists in the minds of people on, in a digital format on the blockchain. You can't grab it and use it and trade it for something. It's not reality. Most people can't use it. They don't understand the concept. And those that do, you could have used Bitcoin to buy something just 3 weeks ago when it was worth 60,000. And now that same Bitcoin that you exchanged to that poor sucker who bought it and accepted it, it's now worth 40,000 in change. So you just lost a whack, right? And people say, well, gold was down last year. Well, the reality was where gold might have been down 3.5%, Bitcoin was down 7%. So there's a whole different framework there for understanding this. But this is ultimately what this is leading to, right, John? Understanding the track record of good assets like gold and silver, a track record that's 3, 4, 5,000 years that has withstood the fall and collapse of every major currency in the world, is probably going to be the safest thing you can do for your wealth strategy this year.
Lots to talk about still. We still got some more time. In fact, is this going to be a year that we see some sort of a crash? We'll cover that. But first, we got to take a short break, so stick around for it. Reaching out, 1-877-323-GOLD, the number, deltaharbor.com, the website. And to watch these videos and all the social media, youtube.com/Delta Harbor, also on Instagram and Facebook and Twitter and LinkedIn and all that good stuff as well. We'll continue. This is Hard Money on Sauga 960. All right, everyone. Thank you for sticking around. Welcome back to Hard Money. Love doing the show every week. Loving having you participate, and you can take your participation even further. And by way of educating yourself, please do, because that's become a hard thing to find. People who want to take the time, make a phone call, and get educated about their wealth strategy, right? You can do that with Darren and Rob and the rest of the guys standing by just to talk to you, have a chilled out chat, and educate you on this part of your portfolio, which may not have been opened up yet. That would be the part of precious metals. Physical gold and silver you can have in RSPs, registered accounts. You can hold it in your hand. You can store it. We'll get to all that in just a bit. But the phone number to start it, at least have a conversation, 1-877-323-GOLD, deltaharbor.com. Darren, I left I kind of left it dangling at the end of the last segment. I said, is this the year going to be the year in which we see some sort of crash? Nobody likes that word. Everyone's scared of talking about it. But what do you think about it?
Well, even I shy away from the idea that we will, John, because I've witnessed for the last 13 years what governments are willing to do, how far they're willing to go down the rabbit hole of debt and printing in order to protect themselves and the economies. And that's what's caused this problem we've discussed today, this two-tiered belief in what risk really is and what consequences that risk will be. So let me say this. I feel that there is a cause and effect relationship of what the last 13 years has done to our economy. And that's left us in this new world with two reasonable levels of outcomes. Okay, the first level is really what we've just talked about, which is the risk takers playing the game of borrowing and leveraging at low interest rates and with little risk that the underlying markets will collapse because central bankers have control of the marketplace through this scheme. At this level, assets soared, and I don't mean just took off, soared to higher highs, and enough of the flood of new credit reached the masses to spark basically a carousel of consumption paid not by earnings and not by productivity, but by debt. So debt got us here over the last 13 years. This is unlike any other situation we've ever experienced. Never had this happen before. Corporations didn't boost productivity. They borrowed billions of dollars and they bought back their own damn shares. They reduced the float, which reduced the float, and thereby generated higher profits per share. That's an equation that they've used for 13 years now. The problem is this new incentive structure generated by this destruction of basic market dynamics has destroyed not just price discovery of risk, it's also destroyed the foundation of true prosperity, which should be to invest in increased productivity rather than in speculative gains. But we've changed that mindset. Central banks have managed to suppress interest rates, but they don't control risk or consequence. On the systems level, all that central banks have accomplished was to transfer all the risk piling up as a consequence of their incentivizing of speculation and making speculation the focal point of investment to the entire financial system itself. So rather than it be a mechanism of just a small group of people, our whole world has become too big to fail. And so they have to keep feeding this machine, meaning if interest rates go higher this year or next, and they will, it won't matter if we fail because they'll just do it again. They'll throw more money, bring the interest rate levels down, and it's almost like that's what they're going to prepare for. And if this isn't reason enough to own an asset like gold and silver, along with the countless things we've discussed in terms of diligent underlying principles for ownership of these two assets, then I just don't know what else I could say to somebody to help them understand that we don't view gold and silver as a speculative piece of investment.
1-877-323-GOLD. Keep giving that number out there. You should use it and have a conversation. If this has got you a little bit nervous or at least scratching your head, maybe you haven't gone down this avenue of your investments so far. But you mentioned two levels of risk right there that are occur in this new world of speculation versus investment and productivity and real gains. You've outlined that with the first one. What is number two? What's the second one?
Well, the fallout from the first part of this is that one consequence of incentivizing speculation and backstopping the biggest players' bets is that the biggest players have reaped the vast majority of the gains. The enormous differential has generated unprecedented wealth inequality, and it's a concentration of wealth in the hands of the few at the expense of the many, which has completely corrupted many parts of the world's political and social orders, including ours here in Canada, of course. So in terms of the second level of this whole risk scenario, I believe that 2022, and this is where we get to whether there's a crash or not, is the year that we witness the unintended consequences of allowing and encouraging this type of unfettered speculation to happen. In other words, all the risk that has been transferred to the financial system as a whole will generate consequences that our central bank and others around the world are unable to control, John. They can control the printing, the low interest rates, and they can encourage and create that air of speculation and reward those massive ill-advised risk takers. But I believe this year in 2022, and this is why you need gold and silver now, not tomorrow, today. As you're listening to this, it's worth investigating because I believe we start to see the end of the following situations. We see the end of banks extinguishing risk and consequence. They have to let this ride. There are going to be burnouts. There are going to be stories of institutions failing. I believe this is the end of the asset bubble era, continuing to expand because of the influence of central banks. If it expands now, it's on its own accord. It's because the people decided they wanted to maintain that and they wanted to keep it going. I believe that we see the end of this belief that prosperity is the result of shifting bets from, let's say, one gambling or gaming table to the next, instead of working hard to invest in real growth and prosperity through real gains and productivity. And finally, I believe this is the end of our belief in central banks as these godlike entities with powers to fix anything. They're not. And the first thing that we're going to see is that they're going to let us fail because they can't resolve personal risk. No central bank is going to come to the door knocking and say, Mr. Smith, I know you just failed because you had 2 homes that you couldn't afford to keep with interest rates going higher. Let me bail you out. Quite the contrary. The bank's going to take those homes and they'll gladly do it like they did in the US, which has made the corporations the largest owners of real estate now. So these are developing situations, John. They're very fluid, but I don't know if this year is the year in which we see a big crash or not.
Either way, it's pretty scary, right? 1-877-323-GOLD is the way to start. Make that phone call, deltaharbor.com. So if this were to occur, now shortly, you're on the fence. That would support the notion of ownership of hard assets, obviously, right?
Right. I want to make it clear I'm not sitting on top of that fence. I'm on the side of the fence that supports that idea of hard asset ownership. 100%. I always ask myself, is something I'm looking to purchase valued at a fair price, above fair price? Is it affordable and of value, or is it overpriced and not of value? Gold and silver, due to everything we have discussed over the last number of months, are examples of extremely undervalued assets that have been underappreciated, have not been invested in by the mainstream, and are about to be, that are completely overlooked by the mainstream. And I believe they have tons of potential, and that I would rather see our clients own those assets now today by getting into the market, by calling and connecting with Delta Harbour in order to find out more about what gold and silver can do for your portfolio. And by doing that, thereby helping and supporting the notion that what Delta wants more than anything, what I want for our clients and our client base more than anything, is for them to recognize these dangers that lie ahead.
We'll continue with another question, which is a little more daring or risky than the last one I asked about a potential crash. It's the R word. We'll get that after the break, though. In the meantime, 1-877-323-GOLD is the number to start educating and investing as well. E-Store, you can do it your own way. You can start investing and getting some hard assets into your portfolio, gold and silver, just by going to deltaharbor.com using that E-Store. But reach out to Darren and his crew and get educated first. And we'll take one final break. More to come right here, Hard Money on Sauga 960. And welcome back. A few minutes to go here. Hard Money on Sauga 960. Reaching out, no problem. 1-877-323-GOLD. Just that simple, right? Call Darren and his team. Get educated on the hard assets that should be part of your portfolio, a percentage of it anyway. Physical gold and silver is what we're talking about. DeltaHarbor.com, Harbor with the U, and of course all the social media channels as well, like Instagram and Facebook and LinkedIn and Twitter, and YouTube.com/Delta Harbor to watch these radio shows. I know it sounds weird, but you can. And view them and go back over and learn a little more from time to time. Due diligence is key, right? Okay, I mentioned it at the end of the last segment, Darren, so I will ask you, 2022, is that going to be the year that we hear that word recession come into play? What do you think?
Well, I didn't think that there was a crash coming in our last segment. However, I'm not so confident about the R word, John. I don't think there's going to be a recession quite yet. I do think we're on the heels of hearing more and more about the things that lead up to recession. And I do believe we're going to witness the effects of no risk and no consequence to the extent that I have discussed on today's show, and that these are warning signs that appear more frequently. The idea is that one should at least consider how to rebalance. Knowing all of this, rebalance, reshape, or better yet, just start their wealth strategy. And, gold and silver isn't the be all that ends all. It's a part of a wealth strategy. A well-planned strategy involves multiple professionals. There is no one professional out there that knows everything about every single wealth strategy that there is. You can have your money parked with a single individual, but the truth is, in my experience, 18 years of being in the gold and silver business, I have come to the realization that there are very few people in the mainstream who will tell you that they don't know about gold. They all know about it. They've all seen and witnessed the gains, but the mainstream has basically kicked them in the arse from being allowed to participate in this arena. They want you to stay away from it because it's not paper. They can't control it. So the Great Recession, right? I mean, the Great Recession of 2008 and 9, the financial crisis, Black Monday, the dot-com era of the late 1990s and the early 2000s. We saw all of them coming. You could be as mindless as possible, but just a few hours of reading, and essentially you could see all the writing on the wall. We saw that it was coming. You may not know the day of or the moment it starts, but you saw it was coming. Subprime, we knew it was coming. Right? When you get this exuberance in buying of any asset class and a bubble forms like it has in many right now, including real estate in Canada, sooner or later the bubble gets burst. It's just a fact of life. We can't go on this same way. So what we say is just be educated, make smart decisions that put you and your family's wealth first. Our bankers and corporate entities, for the most part, are out for themselves and their bottom line stockholders. The signs of market exuberance, however, John, are everywhere. So even though maybe recession doesn't come just yet, there are signs of extreme exuberance. Some we've talked about, but in addition to that, the Bull Bear survey by the American Association of Individual Investors, which comes out every year, it's taken at the end of April. It indicates bullish investors outnumbering the bearish investors by 32 points. That was back in April of last year. Imagine what it's going to be like by this year with all the gains and all of that risk-taking and speculation built on debt and not real gains and prosperity happens. That AA II survey is historically a contrarian indicator, and when the spread exceeds 20 points, there is a reason for concern. It's at 32 as of last measure. Second, the Chicago Board of Options and Exchange Volatility Index, the SIBO index, or VIX, as some of you may know it, indicates that the fear of a market correction is at a very low level. Again, a very contrarian indicator. Third, cash balances of professional money managers are well below historic levels. That's a huge concern for me. That's one of my personal concerns. When I work with my planners and advisors and their institutions, I want to make sure that they are flush with cash. I don't want that dropping by the wayside or importance. That's something to watch for. It definitely is weak right now, and a contrarian thing there. Fourth, how about the fact that the ratio of insider sales to buys indicates that there are 143 sales for every buy by insiders, according to recent data from Richardson Wealth. That was something that they put out that was very recent, that showed that insiders are selling 143 times more than they're buying. So what does that tell you when the likes of Elon Musk and Jeff Bezos and others are selling their own stocks? I don't care what story you concoct. You do not sell your own stock if it's doing well and expect it to continue down that path. And fifth, the emergence and popularity of leverage loans, which is something we talked about. Huge contrarian thing. Mergers that are taking place at elevated multiples and rising global debts that is flashing red, especially here at home in Canada. We talked about just a couple of weeks ago, Trudeau in 7 years of existence has created more debt for this country than all the former prime ministers combined in 7 years, right? This is the waking age of idiots in management. Don't ask me how we got there, but it's across the board. People are allowing to do it. And I think it's just because we are unfortunately wrapped up in the realm of those 1%ers. We want to play in their casino, but they're never going to let us. And finally, and probably most important, John, look at your stock portfolios, right? Valuation metrics point to a richly valued market. For example, equity value to GDP in the US stands at the highest level it stood since 1950s, with the only exception the 1999 to 2000 tech bubble, while the Wilshire 5000 total market index to GDP ratio has reached a record high. These are massive contrarian indications, and we don't have enough time to go into it in today's show. Suffice to say, there are many more. So at Delta, our primary focus remains customer support, John, above all of the things before you make a purchase, sell gold, silver, open up a storage account, do anything else. It's educate you. We'll always go above and beyond to ensure that we are the best Canadian gold buyers and silver dealers in Canada. And we want to support that notion. And so when it comes to all of these things adding up, John, it's important to recognize where we are, what this consequence of all this risk and speculation is, and exactly what you can do to fix it, which is to reshape, rebalance, rethink your wealth strategy.
The number 1-877-323-GOLD to reach out to Darren and the other crew. Is there a minimum buy for people they want to dip their toe and maybe get some of these hard metals into their account just before we wrap for the day? Is there a minimum account? A minimum
Great question, John. There is no minimum account. Plain and simple.
Cool.
We can make recommendations on both sides of the fence for gold and silver owners, or for both products. We can talk about bars versus coins, storage versus taking it home, ins and outs. But at the end of the day, you can invest in the smallest thing that we have, which is a single 1 ounce silver coin, silver maple leaf coin, which is approximately in the price range of $37, $38. Very easy to acquire, very easy to own, and go to the website to do it. You can store it if you don't like the idea of keeping this very sensitive hard asset at home, feeling unsafe about that, or you just want liquidity. I want to pick up the phone and call to buy or sell. Those are all things that we can help people with, John, very easily, no minimum commitment. And ultimately, this is about our investors. This is about you re-educating yourself, thinking differently outside of the box, as we said a couple of weeks ago. And we want to support people to do that. So if you like what you heard today, please call a number. And as always, we get to the end of today's show. It's cold outside. Please take care of those less fortunate than you. This is a time and age in which we need to work together to do that and make sure that those people that do not have things like you and I have are taken good care of. Give to your local food banks, please.
Done for another day. 1-877-323-GOLD. Finally, the number one more time and online to deltaharbor.com. We'll catch you next time in Hard Money right here, Sauga 960.